on Friday, and we are starting to see the impact of the bank's failure, including some San Francisco housing projects now on hold. KTVU's Jenna Katsuyama live at Silicon Valley Bank there in Santa Clara with more on the fallout. Jenna.
Mike, so many of the people who were lined up here this morning said that they were very relieved by the FDIC's decision to use some of their own funds to help bridge this gap while they sell off SVB's assets. But there is still a big question for anybody who had loans with the bank, including several San Francisco housing projects. For them, the future is very uncertain. The stress of Silicon Valley Bank's sudden collapse was clear on Monday as a long line of clients lined up to get cash from the Santa Clara headquarters.
We still owe a lot of money to people we have hired, and I'm here for them.
After Friday's FDIC takeover, the U.S. Treasury Department and Federal Reserve were quick to step in, announcing that all of SVB's $200 billion assets would be sold off and clients eventually would receive all of their deposits, even for clients whose balance exceeds the $250,000 FDIC insurance limit.
Americans can have confidence that the banking system is safe. Your deposits will be there when you need them.
President Biden and others called for an investigation and transparency.
We must get the full accounting of what happened and why.
The fallout has created payroll problems and challenges that go well beyond the tech sector, venture capital, and startups, which made up a large portion of clients. In San Francisco, 4 major affordable housing projects are financed with SVB loans. Now those are on hold, their future uncertain.
And that can take anywhere from 6 to 8 weeks. Underwriting is a lengthy process. And as you know, we've all heard with affordable housing, delays mean more money.
Work was halted at 234 Van Ness Monday. SVB was scheduled to fund a loan for that project last Friday, the very day the bank collapsed. City officials hope other banks will assume the loans, but are concerned about delays.
Trying to make sure that we can help, and whether it's providing gap financing through the city to get them through this hard time.
Stanford University professor of finance and economics, Anat Admati, says SVB officials and regulators are to blame.
And the question is, who's going to make sure that you don't take too much risk relative to the equity that you have?
SVB's chief risk officer reportedly left the bank in October last year and wasn't replaced until this January.
That they should monitor the investments. They should monitor the funding mix, how much equity and how much debt they have. And what you might have in some other banks is that basically there are more losses in the system than the system is recognizing. And that should be recognized and dealt with before another disaster comes.
And just yesterday, Signature Bank in New York with $110 billion in assets also collapsed. There's a lot of concern, but many people are hoping that these federal regulators, their steps that they're taking now could help to prevent other banks from meeting the same fate. Reporting live from Santa Clara tonight, Jenna Katsuyama, KTVU, Fox 2 News.